Here's Mike. Today's stock of the day is Home Depot. The stock trades on the NYC under symbol HD. The stock was down 0.5% yesterday. However, the stock has broken out. If you look here, this is the one-year chart of Home Depot, and as you can see, it was pretty much trading in a range from about late August right up until mid-February. Then it had a dip when we had that big downturn in the market, and since then, it's really been on a rocket ride up since early March, and it continues to move higher and has officially broken out. It's hitting a 52-week high, and I definitely think Home Depot is one of those stocks you may want to consider going into during this month of April as well as through the summer for a couple of reasons. One, it has broken out after being in a range for about 6 months, and usually the longer that a stock is in a range, the more violent the breakout, either on the downside or the upside. And now that Home Depot is breaking through 52-week highs, the chances are that it's going to break much higher to the upside, and I'm talking maybe 15 to 20% over the next 6 months. Now, the reason why you should definitely take a look at Home Depot is I do think we're going to have a strong April. However, going into the months of May, June, July, and August, I think the market's going to be pretty choppy, and it's going to be very hard to find stocks that are going to move higher. And I believe that the market's going to be looking for about quality stocks, stocks that have a good PE ratio and pay a dividend yield. So you see here, Home Depot is a relatively large company with a market cap of over $330 billion. The PE ratio is about 26, which is excellent for this market. The dividend yield is above the S&P average and above the 10-year note. So that's going to make this stock very attractive, not only for value investors, but also for some growth investors who are going to be seeking some more conservative plays. So what's driving Home Depot from moving higher? Well, I think there are a lot of factors playing here. One is the price of new homes are going up really, really high right now. The price of home resales are really, really high. So I think a lot of people are going to opt to basically stay in the home that they currently have instead of buying a new home because just about every new home that comes out gets a bunch of cash offers. So you may have people who may opt just to do home improvements for their existing home rather than to go ahead and buy a new house. And because of that, Home Depot being one of the largest home improvement stores along with Lowe's is going to make this stock really attractive and probably attract a lot of businesses. Um, I also think that Home Depot is just very well positioned in this market. I mean, obviously, people are getting their stimulus checks. There may be people who take some of that stimulus money and use that to make home improvements, minor home improvements. And then I think people who maybe wanted to buy a house but don't want to pay the higher home prices are going to make major home improvements. So either way, Home Depot should do really well. And I definitely think you should start looking at companies that have, the dividend yield above the 10-year and above the S&P average and a PE ratio below 40 and a large market cap, a large dominant company. I think these are the companies that are going to give you the outperformance at least until November when we go into the expected Santa Claus tech rally. So definitely check out Home Depot. Again, it trades on the NYFC once again at under symbol HD. Okay, so I hope you enjoyed this video. If you did, be sure to leave a like and go ahead and subscribe and turn on notifications. I do multiple daily updates on stocks, options, and market updates. Thanks a lot. Bye.